going to build our story from the top down. So let's quickly hop to the daily time frame and go from there. So this is around the end of September 2022, and we can see that the daily is clearly bearish, making lower lows and lower highs. We've had a daily break of swing structure here, so after that daily boss, we can expect a pullback. We've had a daily change of character. Okay, so we've had a daily chock there, which is our first signal that perhaps something is changing, and now we might start to see a bit of a pullback into the EQ or the premium of this daily leg. So if we take our premium versus discount from the high to the low, right, you can see that we've got this zone here, which is pretty insignificant because really it hasn't achieved much, right? It hasn't really led to any break of structure. There's no inducement, it hasn't swept liquidity, it hasn't overpowered another zone. So it's a pretty low probability zone. I'm aware of it. Maybe there's going to be a tradable reaction from here, but other than being sort of sat in and around the EQ, it's a pretty low probability POI. Now, if we look sort of within this region of price, you can see that we have this whole daily range here, which is in the premium. And if we start to look at the confluences of this particular POI, we can see that, first of all, it directly led to the swing boss. It also overpowered this level of daily demand. So we have a demand to supply flip. And you can also see that it swept liquidity resting above that fractal high. So it's a sweep zone. It also flips this level of demand. It's in the premium of the range. And for one last added confluence, you can see that this range here mitigated the extremes. So it's basically the last point of unmitigated supply within this daily range. So it's a high probability POI to get short, okay? So I'm just going to remove this and tidy things up a little bit. So we've had a daily swing breaker structure. We can obviously expect a pullback at some point. So now if we hop to the lower time frame, so we'll go to the H4. Now you can map your 4-hour structure in a few different ways. For me, I prefer just to be a little bit tighter with my mapping, just so that my daily and 4-hour structure are not the same. So, you know, you could view this as internal structure, or you could view it as swing like myself. It really doesn't matter. The point is we have now seen a clear shift in structure and order flow on the 4-hour, which is a pretty good signal, combining that with the daily change of character, that we might now start to see that daily swing pullback, okay? So this is a pretty good area to look for longs because there's a lot of value down here to play that swing pullback, right? We've got enough room to play that daily swing pullback into at least the EQ, perhaps into this daily range up here. But ideally, we'd like to see price up into this daily extreme. If I just quickly remind you, that is that high probability daily POI that we just looked at, okay? So yeah, if we go back to the 4-hour, we can now see that we've clearly shifted bullish. As I say, this could be internal, it could be swing, it doesn't really matter. Now, in terms of valid demand zones to trade from, we have this 4-hour extreme, okay? So this would be pretty much the only valid 4-hour demand zone that we can trade from because there's nothing else in this leg of price. So it's a high probability demand zone to look for longs, especially when we're this well priced right at the start of that potential daily swing pullback. There is no inducement, but to be honest with you, I'm quite happy trading from extremes that have no inducement, especially when they're this well priced, okay? Now, another thing to mention is that particularly on EU, price doesn't always pull back that far upon the initial trend change, okay? So again, what we can do here is take our premium versus discount from the low to the high, okay? And sometimes what you'll see is price just sort of pull back to the EQ and then continue its mission. It doesn't always pull back that far, you know, upon these kind of initial trend changes, right? So from a 4-hour perspective, longs are pro trend, okay, because the 4-hour has now shifted bullish. If you wanted to start looking for those counter trend moves to play this 4-hour pullback, you absolutely can. So let's look to the left of the chart and see what we've got in terms of supply. So we have this 4-hour pivot supply here. Now, not the highest probability zone in the world. It's completely unmitigated because price failed to pull back and mitigate it when it was created, but it hasn't really achieved much other than, you know, we can see that there was a large amount of supply that entered the market from this pivot supply, okay? So it could definitely provide a tradable reaction, and this is potentially where that pullback is going to start from. So at this point, you might want to drop into a lower time frame, like the 1 hour or the M15 or the M5 or whatever your lower time frame execution is, and potentially look for a short to play this 4 hour pullback, down into the EQ or potentially down into extreme demand as well. Okay, so let's just continue playing this for a little bit. So price starts to now pull back. Okay, so at this point we've now mitigated the EQ. So like I say, EU doesn't always typically pull back that far when we get those initial trend changes, especially when there's a lot of momentum in the market as well. So at this point, what we can do is drop into a lower time frame, such as the M15, and we can start to investigate some potential zones in and around the EQ of this 4 hour leg. Okay, so let's do that and hop into the M15. So from an M15 perspective, let me just zoom out here a little bit. There's a couple of ways in which you can map your M15 structure, but let's just view that as an M15 swing pullback to keep things simple. That would be an M15 breaker structure. Price then pulled back to the premium of that range. We then ranged a little bit, eventually got that M15 break of swing structure, meaning this high then becomes our M15 strong swing high. And then you can see the M15 switches bullish, which is the same as the H4. Now, I much prefer to have my structure mapping different on specific timeframes, but in this example, because I've mapped my 4 hour swing structure slightly tighter, it just so happens that it's the same as the M15. But it doesn't really matter because we're going to arrive at the same conclusion. We know that we're in a high value area to look for longs to play that daily swing pullback. And we also know that we have pulled back to the EQ, which just increases the probability that the swing pullback is now complete. Okay, so this is where we can start looking for longs, whilst also being mindful that upon an initial trend change on euro dollar, we don't always pull back that far into those nice discounted areas, down here, for example. Okay, so let's look at some POIs in and around the EQ of this leg. Well, you can see that we have this clear inside bar that price is currently reacting to. So what are the confluences of this POI? Well, first of all, we saw a lot of momentum into the market, directly leading to that break in structure. If we look to the left of the chart, we can also see that it did flip a little bit of M15 supply. Now, this is not the highest probability flip zone. The reason why is that this supply level has already been mitigated, but there was a little reaction from there nonetheless, so it is a valid supply to demand flip. Okay, so we know that this is a pretty well priced POI. If you wanted to literally trade directly off that M15 demand zone, then you could set what we call a risk entry on the open with your stop loss just below the close, so nicely protected. And then you could target the week high for 6%. Okay, so that's the first way in which you'd enter from that M15 demand. Now, if you wanted to just increase your probability a little bit to confirm that this zone is going to hold, well, then you can just wait for the M15 internal to switch bullish, wait for M15 supply to clearly fail, and then that confirms that the pullback is likely finished and we can target that week high. So let's just play a few more candles forward and see what happens. So this zone is still holding at the moment. Okay, now M15 supply has clearly failed. And you can hopefully now see that we have a newly created supply to demand flip. Okay, so I'm just going to take the wick of that candle as well. So again, you could refine that zone a little bit to the inside bar. That is personal, whatever works for you. Some people prefer just to take the whole range. Some people prefer to refine to single OBs or pivots, whatever you want to call them. So now we have fractal realignment on the M15. It's all systems go to target that week high. Okay, so you now have, I'm just going to remove the premium versus discount. You now have a fresh POI to trade from, which is just slightly higher probability than entering directly from this zone. Okay, because there's always the potential that price could come down into these discounted areas down here, but just waiting for that extra confirmation, waiting for order flow to shift bullish, is just going to increase your probabilities a little bit more. Okay, so you could enter on that POI like that. I'd personally just want to have my stop below this low here, right, just to be safe, and then you can target the week high again like that. So let's play a few more candles forward, see what happens. Okay, so it looks like a no tag in this situation. Now, if you wanted to be more aggressive, because we have fractal realignment, it's all systems go for longs. You can just continue to follow order flow and look to trade from the nearest M15 demand zone if you wanted to. Now, you can see that we have this M15 demand to trade from if you wanted to be more aggressive, which also flipped this level of M15 supply as well. So it's more than valid to look for longs from here. The only thing I'd say is that sometimes these sort of zones are used as inducement for unmitigated extremes, okay? Because there's no inducement in this leg of price, but this POI has clear inducement in front of it, okay? So this POI is still more than valid if you wanted to keep your entry pending on the extreme. However, as I say, if you just wanted to like put your foot on the gas and find any excuse to get involved in longs, then this is the way to do it, okay? Just following that order flow. So you could set your entry from this clear flip. So let's just see what happens. Okay, so now you're tagged into the position. At this point here, maybe you will remove your risk depending on, you know, whatever your management plan is, or perhaps you'll leave your risk open. Okay, so at this point here, again, if you just wanted to keep following order flow, we have this fresh demand to potentially trade from. Now, hopefully you can see there's no inducement in this leg of price, okay? So it's not the highest probability POI. It's also in the premium, so it's not very well priced, but we are yet to take out the weak swing highs. So there's always a possibility that, you know, price pulls back to here and order flow continues bullish until we take out that high. So let's just continue playing a few more candles forward. Okay, we initially react from that POI, but as you can see, price has just traded through that zone, which no surprise really, because there is no inducement in this leg of price. So more often than not, these zones will fail. So price just traded through that zone and has just come back down into this zone here by the looks of things. Okay, and then we've continued to push higher after that liquidation, and then it looks like price is on target to take out that weak swing high. Okay.